learn the simple trading strategy I want to show to you. Hi, welcome to GITIXONE services, and this is our first video since we rebranded from Go Capital FS to GITIXONE services after proper registration with Corporate Affairs Commission in Nigeria. Okay, the reason we are doing this is because we want to give you the best, most trustworthy and effective strategies, okay, that you can use to make money for yourself. In today's video, I will be talking about Crash 500 Index and how you can leverage that asset to make good money for yourself. It's actually a very simple asset. I see people who are using moving averages, RSI, MACD, and a host of indicators just to catch the spikes or the drops, or they want to make some good money for themselves, but they end up not making money. Today I want to show you something that is very simple, something you can relate with, something that you don't need any single indicator, but yet you can be making good money for yourself. You just need to follow the process. All right, let's get into it already. Welcome. Let me show to you some of the few things that you need to know before you can trade Crash 500 Index successfully. And like I will always say, every particular asset that you want to trade have a behavior. The behavior is what you know as the trend of that particular asset. The trend is the behavior, all right? The trend is the properties, the characteristics, something that distinguishes a particular asset, all right? So when you come to Crash 500 Index chart like this, the first thing that you will be looking at is what is the trend, what is the character of the market, all right? That is so important, because you cannot make money, you cannot take as much as $1 from this market if you do not know the character of that asset. So I'm about to show to you the character of Crash 500 Index, how it moves, what you should take note of, and it's going to work for whether you want to trade it on the 1 minute, on the 5 minutes, on the 15 minutes, any time frame, even as high as the H4 or even daily. Of course, not many people trade in the daily time frame. That's for the Crash 500 Index, but that is the most peaceful time frame to trade. Anyway, I'm going to show to you something you've never seen before, and maybe you have seen it, but hearing it from someone else may just do that magic that you have been waiting for, okay? Because sometimes we find out that many strategies that you've learned and dumped are actually very powerful and can give you the kind of money that you are looking for. But the reason why you have not made money up to now is because you didn't trust it, because you found it by yourself. And frankly, if you want to make money in this market, you have to come to your zone, something you've discovered, something that works for you. It does not have to mean a particular strategy, but a collection of a strategy, your mindset, your day-to-day life, everything that you want to do must align, okay? That's how you can be successful. You cannot be successful trading Crash 500 Index when you do not factor into your plan all of this. So your trading zone, that means the place where you make profit, is going to include not just your strategy, but also your day-to-day life, your mindset, and a host of other stuff, right? These come together to make you successful. All right, so I will show you a strategy now, which I have also taught in this channel. I will also link some videos below that will refer you to the strategy again, but I will still explain it. That way you can catch the spikes like a 5-year-old. Yeah, actually the drops like a 5-year-old. All right, so now let's go right into it. Let's look at, let me pull up my whiteboard. Okay, all right, okay, so this is my whiteboard, and we'll be doing quite a lot of stuff today, and this is so important you pay attention to everything want to do in this class. One or two things, then it's as good as you never attended this class. But if you can just pay attention, be patient, listen to the end of it, I am saying you will get something worthwhile. Your time will be well spent today. Okay, so let's get right into it. I had said before at a point in this channel that the market will move from a point which is a low, all right, to a high point. Then when it gets to that place, I said it will come back again. It's a normal thing for it to come back. That's, we call it a pullback. Okay, so that is a pullback or the retracement. So the market will move up again if it is in an uptrend. Are you getting me? So now this characteristics is that of an uptrend from a low, all right, to a high, back to a higher low because it's higher than the previous low, and then a higher high that is higher than the previous one. Okay, so when the market wants to come back again, it will not just come down to just any point. It will come back to a point maybe like this one or like this. Okay, so I mentioned this before, but let me just take this scenario as what is playing out. So when the market returns back to this level, it will go back up again. All right, so this will continue to happen. Okay, to continue to happen until the market gets to maybe any high that is equal to another one this way. Okay, but let me clean this now. All right, so now when this market gets to this high, take note of what I'm trying to do now, and you start to observe the market come down like this. When the market does this, something have happened. It is no longer the structure of an uptrend as it's here, because a low here has been created that is lower than this previous low, which is a character of a downtrend. Okay, but you cannot confirm it yet. So what you do, you wait for this candle to actually close below this point here. All right, so which it has done, it has closed below it already. So now that it has closed below it, what are we looking for? What are we looking for? This is so important. Okay, so now what I want to show to you, I will show it to you on the chart. There's going to be a box here. Okay, a box. I want to paint it red. Let me paint the box red. Sorry, let me. Okay, so there's going to be a box here, a red box. All right, then there's going to be a green box like this. All right, so this is a bearish engulfing candlestick pattern. All right, this is a bearish engulfing pattern. What you are expecting to do is to wait for the market, all right, to drive back from here all the way to this block. So let me change the color. All right, so we're expecting the market to return back into this, and then you will sell from this block. You will sell from this block downwards. So this is what I'm about to show to you. What I'm just writing here now is something that happens on any time frame. Are you with me? Now you do this for the crash 500 index and you will start making the market. Now, but the thing is, you have to understand that the market must be in a downtrend, meaning something like this would have taken place. Just hold on for me. Something like this. Okay, so something like this would have taken place. The market would have come down in this manner. Long term, what I mean long term, it must have been coming down from a particular high, or you have already seen that the market is coming down from a higher time frame, which I will show to you when we go to the chart. Okay, but you must have seen the market painting this kind of structure. Now the moment it starts going back up like this, what you'll be looking for is for this type of thing to happen. So let me draw it again, something like this. Low, okay, comes to a low, high, okay, breaks the low. Are you with me? Then you're waiting for it to return back into this block. And this block, there's going to be a bullish engulfing at this point. So this is where you are waiting for it to sell downward. Are you getting me? So this is something I'm going to show to you in a chart, on the chart today. Now, this is not the only thing. I will show you a second one now. Okay, so let me clear this part. Sorry. All right, so now you can take a screenshot of this one. I want to draw a second thing now, a second pattern. Okay, so take a screenshot of this. Are you done? All right, so now let me show you something else. Now what I want to show to you is this. As this market is coming back up into this block like this, breaks it up, right? Then it starts coming down. As it is coming down, it will leave a red box, all right? A red box in the middle here. Are you with me? In the middle here, which will also look like a bearish engulfing pattern. It will also look like a bearish engulfing pattern, okay? So in this manner as well. The thing is the same, all right? The difference is that it's at the middle instead of at the top. They are both other blocks. Are you getting me? So what you do is you wait for the market to return back into this block, and then you sell from this level to return back here, and then you sell from this level. All right, so what I just showed to you now happens every time in the market. But take note, what is the thing you must see? There must be a shift or a break in market structure like this. The market is already coming down long term in this manner, okay? But then it started going back up. That's a retracement. And after going back up, it gets to a point in the market. And after reaching that point, it started creating this pattern that look like a Z. I've shown you this pattern before in this channel. You can watch other videos here. I'm going to link some of them in the description so that you can get a recap of what I'm trying to say. But once you see this bearish engulfing here or at the top here, this is where the market will return back to, and it will sell. Are you with me now? That is what you do, not you putting RSI indicator or something on your chart. You are not going to make money trading with indicators. I can tell you it's a stage. You are going through it. If you are currently using indicators, no problem. I will not discourage you. It's a stage. You are going through it. I went through it as well. I spent a lot of money purchasing indicators. I'm very sure the indicators you are using are even the ones that are very free. Maybe they are free on TradingView. They are free, on MetaCode store, the places where you get them. Maybe you got them for free on a Telegram channel. No problem. Test them out. Enjoy them. Trading is very, 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 very enjoyable. It's something that you would like to do. But at the end of the day, you will find out that what I'm showing to you is bigger and better than any indicator you're going to use. There's no indicator that will give you money. As long as it is derivative you want to trade, no indicator will give you sustainable profit. Actually, no strategy will, but indicators are on the worst side of it. All right, so this is a break in market structure. Some people call it BOS or a shift in market structure. So SMS is the same thing. All right, so once the market shifts, like it breaks the structure of that uptrend it was creating, and it shifts like this, create a lower low, lower than this one, then you know that it's already going to sell. Then you wait for a sell at this junction. That's the second one. Have you taken note of this one? Okay, let me show you the third one. All right, so the third one I want to show to you is this. At this low here, there will be a bullish engulfing. Sorry. Okay, at this low here, there will be a bullish engulfing. Okay, at this low here. All right, just hold on for me, please. Okay, so there will be a bullish engulfing in this manner. So what I'm expecting you, or what you're supposed to do, is to mark this area like this. Okay, so once the expectation is that the market is going to return back from this low here into this block, and then when it does so, it will go down. These are the three patterns I wanted to show you. Now, you must study this thing. It's a character you must study. It is there every day. This is not the only way to trade, but I'm showing you something you can do that is so simple, very easy. In fact, sometimes you don't even need to look at the trend. Once you see it, it's there. But it will work better and it is safer if you stick with this when the market is trending. All right, so when the market is trending downward, because you are trading crash 500 index. Are you with me now? So all right, I believe you know the bullish engulfing and the bearish engulfing pattern. So I've shown you where you're going to see them. I've shown you what the market will do before you begin to pay attention to it. All right, so now let's go to the chart. All right, so this is the chart. This is a very clear example. I'm currently on a trade. This is a small account, okay, that I'm trying to grow. All right, so I'm currently on this trade. I will make. So this market moved all the way from this level up and came down, created a low and moved up. This is a character of an uptrend. All right, so moved up and then it got here. Then all of a sudden it dropped and it broke a structure, broke a low here. All right, broke a low at this level. So this low, this tells me the market is about to go down. All right, so my own job is to wait for the bearish engulfing to be created. So, and what is it? Look at it here. It was created here. Now let me draw it out for you. Okay, so now you can see this is a bearish engulfing that I'm talking about. Are you seeing this? The market returned back into it, and what happened to it? It dropped. It dropped. Now I'm expecting this market to keep dropping till it gets here. All right, this is the 30 minutes time frame. This thing I just showed to you now, I can show it to you on the 1 hour time frame. I can show it to you on the 5 minutes, on the 15 minutes, any time frame. Okay, so let me show you more on this same time frame. Here is another one again. Here is another one again. Are you seeing this? Are you seeing it? What happened? The market started coming down, then created a structure here, then it broke it again. The moment it broke this structure, you know you should be waiting for a bearish engulfing at the top here. That bearish engulfing at that top is so important. You must pay attention to it. And then the market got here, voila, started selling, and it sold all the way to the downside. Now you notice that every time the market breaks, it actually established that bearish engulfing. All right, so imagine, look at this. The market broke a structure here, came down, and it left that bearish engulfing here. What happened? It sold down. All right, so this is the bullish engulfing I told you about in the other case. Sold down. Now, but you don't have to. Another rule. Okay, first rule you must know as a trader that wants to trade crash 500 index is, if you are buying, don't ever buy at the top. And then if you are selling, don't ever sell at the bottom. You sell at the top, you buy at the bottom. But this strategy I want to show to you, I want you to test it out only when you are selling. So don't sell, don't buy with this strategy, even though it works for a buy. But remember, I'm here to teach you how to catch the spikes, the drops. Okay, so that means you will use the strategy when the market is selling. Are you with me now? So now let me show you another scenario. Okay, now you see that in this scenario now it failed. Let me show to you. You see that the market moved from this level and it moved to this level here. I don't know whether you can see my chart. Let me zoom for you to see. All right, so the market moved from this level and it got here. Now it started selling down after it got there. Now it left that bearish engulfing. Then when the market returned back to it, it did not sell. It did not sell from this level down, because from what I've shown you, it's supposed to sell from here downwards, but it did not sell. Now can you tell me why? The reason why it did not sell is because the market is in an uptrend. This is the reason why, first of all, I have to understand what is going on. From all the way from this level, market will be trending up, trending up, trending up. So you cannot be the one that will begin the sell. You have to see the sell trend already began. Like you can see that also here is an equal low. Okay, these are equal lows. The market did not break the structure downwards. Let me zoom it for you. Okay, the market did not break it downwards. These are equal lows. I will mean now, these are equal lows. So because the market did not break it downwards, we are still in the uptrend. Are you with me? We are still very much in the uptrend, but the market created the same pattern here at the top here. All right, it didn't go back to it. Then we are waiting. Then it left another one here. This is the one we enter. This is where our entry is. This is where our entry is. Okay, so you enter at this place, beginning of the block, and your stop loss goes above it. All right, sorry, your stop loss goes above it. All right, so that's what you do. The moment you see this, that's what you do. Okay, so let me show it to you in a downtrend. Again, it happens every time the market is in the downtrend. I will mean now. Okay, so the market did this at the top here, created the same pattern here, but we cannot say it's already selling because it has not broken the uptrend structure. All right, so the market, you allow it to sell. So now it has completely broken this low here, so we can say that the market has reversed and is going down. So what we are waiting for is for the bearish engulfing to be formed at the top. All right, so now the market kept going down. It didn't give us any of those options except for this. Are you seeing this? Okay, I didn't show you this pattern. I didn't draw this. This one is what we call bullish inside bar. Okay, so this is also a valid pattern to look at. So the moment you see all of these type of patterns after a break, that is where you enter your sell. You will catch a lot of drops downwards. You will catch a lot of drops downwards. That is what you do. Okay, so now let me go to a higher time frame, the 1 hour time frame, to show you that this happens in all the time frame. All right, now this is the 1 hour time frame. What do you see? The same thing. Are you seeing it? Immediately the market tapped into this block here, it dropped down. It's been dropping down. This is one of the reasons why I believe the market will keep going down. Are you with me? Okay, so now let me show this to you again in another time frame. You can see it everywhere. You can see it everywhere. I will make. You can see it everywhere. This is the same time frame. All right. You can see it everywhere. Okay. Are you seeing this? Immediately the market breaks a structure, you wait for it to return back into it, and you know that it's going to sell. I will make. So that is how you mark it. Are you seeing this? It dropped, but it didn't drop for long, right? So this will be a failed signal. There's no story that is perfect. Okay, so but what I'm trying to show to you in a nutshell is that at that bearish engulfing, once the market return back to it and it's in a downtrend, like you are so sure that it's in a downtrend, then the market will keep dropping. Okay, well, I'm just showing you what you need to be looking at. Immediately the market breaks like this at the top, immediately it changes the structure from an uptrend to a downtrend, then you start looking for these type of things. Once you see it, you place your entry there. This happened in all the time frame. Okay, lastly, let me show it to you on the 5 minutes. Okay, so let me show it to you on the 5 minutes. Okay, so on the 5 minutes, you see many of the kinds I talked about. This is the one I talked about in the middle. Are you seeing this? So this is another reason why the trade I took was valid. Okay, that's the point where I took the trade. On the 30 minutes, it was showing me that same strategy. Let me go to 30 minutes again. Are you seeing the 30 minutes here? On the 30 minutes, this is where it is, which is where my stop loss is now, as you can see above, right? Are you seeing my stop loss above? Okay, then on the 5 minutes, you can see it here. Okay, this is the other one I told you that is in the middle, it happens. Okay, so then you can see this one here. Are you seeing this one? Are you seeing this one? So if you want to be a scalper, this is the right way to scalp the market, and you look for this variation engulfing at the top. Are you with me? So now the question is, this one did not sell it. All right, this one also did not sell it. Okay, let me clear all these things so that you will be seeing it clear. Okay, so now this one did not sell it. Okay, then this one did not also sell it, but this one did, which is the one at the top. Now most times it happens, you cannot really know which of them will sell it. If you are seeing 1, 2, 3 like this, what you should look for is the one at the top. Okay, I only took this one because it's aligning with the one in the 30 minutes time frame. I will mean now. So imagine I'm waiting for it to get here, which when it does in the future, it will still sell. But because this one aligned with the 30 minutes, and I was already putting my stop loss above this one, so I'm catering for the privilege for it to roam around to this level. So with the idea, with the mindset, or with the understanding that once it also gets to this level, it might still sell in the future. Okay, so that's another thing. Meanwhile, my stop loss is above the two of them. Do you understand what I just did? Okay, so sometimes you have to be smart to do this thing well. Now you can see that it's everywhere on the 5 minutes. It's everywhere on the 5 minutes. The moment the market breaks and it's like it's creating a structure of a downtrend in this manner, what you wait for is for it to return back into that block. And when it does, you sell. Okay, imagine what happens here. Are you seeing this? When it does, you sell. Okay, so let me show you more examples. It's everywhere. It happens every time. It happens every day. I'm seeing so many that I'm scrolling by, but I don't want to just talk about them. Right, so this is one. Told you about this. Okay, so you can catch the drops, the spikes. All right, you can catch the drops, the spikes, however you call it, every time. All right, so with this strategy, that's how we can do it. Are you with me? So now, few things I want to mention before I end this video. Number one, ensure that the market is trending down, or a clear structure of a downtrend has been painted before your eyes before you look for this thing I just showed to you. That is the character, that is the pattern, that is the behavior, that is the property, that is the way it behaves. Once the market is in a downtrend, it will keep respecting what I just drew for you. Do you understand? So before I come in, okay, right, so this is what I wanted to just show to you today. Now if I let me just say this, you can even see on 15 minutes it's happening everywhere. You can see it on 15 minutes, it's happening everywhere. It's here. Okay, it's here. You didn't get to it. Okay, they are here. Okay, but this one is no longer, it's not valid because it did not break out any structure. So I'm not going to place a trade on this one because they didn't take out any structure when it was dropping down. All right, so but I'm expecting that this one that I'm already on, based on the 30 minutes time frame, will continue to sell the market downwards to this level that I am at the bottom. Okay, so I can take out the data of last year and the whole of this year, and I'll show you this thing that happens every time. So your job is to go to your chart now and start learning this pattern. When you start learning this pattern, I believe that you are going to make some money with it. So make sure you learn it very well. Till I come again with another video. Enjoy trading. Thank you so much for watching. God bless you.